Hello, everyone. Welcome to the first live broadcast of the week. Let's just put up the risk warning. So if you're new to these, we do these, try and do them every day of the week at 12:30. And it's a quick 20-minute look at the major markets: pound, euro, gold, oil, stock market indices, just to see what's going on and what the major events are for the week. I do think this week is going to be, this is Brexit week this week, yet again. So I think there are going to be, at the moment, chances are there are going to be 3 votes in Parliament on Brexit. Tomorrow, I think that we're expecting the politicians to have another so-called meaningful vote, the one that Theresa May lost massively 2 months ago. Expected to lose again, but there's already talk about it either being downgraded, what they're going to vote on, or even delayed, because negotiations have it feels like negotiations have ground to a halt, and we've got 2.5 weeks left until we're meant to leave the UK. So it's really going to be the focus, I think, for this week. Everything else is going to take a back seat, and we see what happens with Brexit. But looking at the other major stuff to watch for this week, we do have some major UK data tomorrow. Well, pretty major. GDP, the latest GDP number at 9:30 tomorrow morning, expected to show growth of 0.2% over the past 3 months. US inflation at 12:30 tomorrow. Of course, an important thing to bear in mind, US clocks have gone forward at the weekend. So New York is currently only 4 hours behind us. So US stock markets open at 1:30. Yes, that's right, isn't it? 1:30 UK time rather than 2:30. So I think it's a couple of weeks until our clocks get changed. So US markets will be opening in an hour's time. Reza, I've seen that email, that message you sent about your account being frozen. Can you? It is. I think our customer service, some of it is done from Cyprus, and it's a bank holiday in Cyprus today. If you send me an email, david.jones@capital.com, I'll see if I can get that resolved for you. But don't worry, I'm sure we can get it sorted out. Right, let's take a look. Let's take a look at the markets and see what's going on. I think we'll start with the pound. Now, what's interesting is going to be how the pound reacts this week. So we've definitely got the potential for lots of pound volatility. And of course, back in January, when Theresa May lost that vote, let's see if I've got it on my hourly chart. We did see it was back here. So it was the 15th of Jan. We did see the pound gain ground immediately on the vote, and also afterwards, and eventually into the end of February. So if it looks like Brexit's going to get delayed, normally markets view that as good for the pound, because again, financial markets, not a massive fan of Brexit, leaving aside whether we are remain or leave, markets like the idea of a not a hard Brexit, a delay to Brexit, or no Brexit at all, whatever. So I think it will be the political events that drive the pound this week. But what's interesting, we were talking about this all last week. We've seen for the month so far, the pound continue to decline. So going from about 133.50 against the US dollar to last week as low as 129.60. And if I flip this over to a daily chart, I was saying all last week, it's this whole 129.50 to sort of 130 area is the big one. So basically, if the pound is going to rally, we are here. Okay, so if we're going to see a week of pound recovery, I think there's a reasonable chance we may see it this week. I'm just picking up on the levels. So we had the low third week of Feb down to about 129.60. The market has pushed a little bit lower overnight, but you can see it's bounced back, and we're trading at 130, 135, that sort of area. So I think this whole 129.50 to 130 is going to be a critical one this week. So I suppose if you wanted to take a view for the week, you want to have an aggressive trade from the week, there is an argument to be a buyer now at 130.35 with a stop loss. I would suggest the other side of these lows. And let's bear in mind, these are only the lows from the last 12 hours. Okay, so even though we are in what has been a significant turning point, the lows down here were only formed last night and also this morning. Okay, but I think it's a really interesting one down here because it's the lows from the third week of Feb. If the strength is going to come back anywhere, then we are here. Personally, it wouldn't surprise me, and we've seen a good bounce back during the European session from 29.60 to 130.34. So we've seen what's that a 70-point bounce back this morning for the pound against dollar. It wouldn't surprise me if maybe we saw another retest of these lows either later today or tomorrow. So maybe that's the disciplined, the safer opportunity to wait for. Let's see if the market sells off from here, and do we see these lows hold again? And let's look at the flip side. If we went sort of crashing through 129.50, the risk is, that opens up the lows from mid-February around about 128. So where we are now is a really pivotal level, I think, for the pound. But because so much of it is going to be driven by the politics, we could have just hours where not much happens. Something happens in the Houses of Parliament, and bang, we get a big move in the pound. So I think it definitely got the potential to be a really volatile week. Personally, I'm looking to see if the strength starts coming in down here, because we still have, if we look at things in isolation, just look at the price action, we've still got this recovery just about chugging along from the lows in January this year. We've got higher highs, higher lows. The market had pushed to 133.50. So for me, I'd be targeting a run back up to these old highs, but it's how messy it gets around here over the next couple of days, given what is happening. There's just a question coming. We're running a trading event at Heathrow on March 30th. The website should go up today. So thanks for that question. So the page on the website should go up today. We're going to invite all UK clients. When the website's up, I'll put it on here. It is going to be free of charge, but it's 2 weeks this Saturday. But there's been a bit of delay because we're doing a few seminars in Barcelona as well, I think, at the moment. So my web page keeps getting pushed down the list, but it should go up today. So when that's up, I will mention it later this week. So there we go. So pound US dollar 130, 129.50, 130 has been big support. So really, if it's going to start recovering from anywhere, we're here. Now the euro, the somewhat confusing and enigmatic market that is euro US dollar. So the big news from last week for the euro was we did see it on Thursday on the latest European central bank interest rate decision. We did see it push to its lowest levels since June 2017. Okay, so the European Central Bank downgraded growth forecasts for the Eurozone. That put pressure on the euro, and the euro dropped below 112, which was the old support, and has bounced back again. We've had this incredible low volatility for the euro. It broke this big level. We haven't seen any follow through. So what I was saying last week was, if you had an aggressive view on euro US dollar to recover, then arguably there's a trade here. Okay, so clearly nothing on these webinars is financial advice. We're just talking about levels and stuff, but we've seen the market break through to 112. RSI's gone oversold on the daily chart, and we have seen the market, that's Friday's trade, that's Sunday night, and that's today. We have seen the market recover. So if you are of the view this is a false break and we are going to see the euro maybe pull back to the highs for the year around about 115.50, it's arguably a trade here at 112.40 with a stop loss under that low, and that low was about 111.70, 111.75. So that's the really big level for euro US dollar. So the break did not see any follow through selling, and we had it before. We had a similar sort of move back here. You can see the same thing happening in November last year. The euro had held above 113. Sells off again to its lowest level since June 2017, but bang, snaps back and does move higher. So I wonder if we're seeing a similar sort of thing here. Not even though the knee-jerk reaction saw the euro not collapse, but sell off sharply on that downgrade from the central bank, there doesn't appear to be that much conviction to push it lower. So I think it's interesting. It's an interesting one here. So for me, my money would be on maybe a recovery back up to 114 in the short to medium term. But again, I think this is clearly going to be a market that is Brexit driven as well this week, because what's going on with Brexit, of course, also affects the European currency. Let's have a quick look at pound US dollar, not pound US dollar, sorry, euro sterling. So we'd had this pretty boring trading for the euro against the pound since 2017, as these negotiations remained pretty deadlocked. We had a break again. This break end of Feb below 86. So back to its worst levels for the euro against the pound since May 2017. But again, we've seen it recover. So we're seeing it's quite. If you're trading these breaks, it would be quite frustrating. Because there's no momentum following the break, and the market just pulls back. And for now, at least for this month so far, 85.20, 85.30 has been confirmed as good support for euro sterling. So bit of scrappy trade, but I think an interesting week. So looking for the pound to recover, but very vulnerable to politicians doing whatever they're going to do. Euro US dollar broke to a low, but has bounced back. Arguably, that is looking like a false break. Let's take a look at gold now, gold and oil. So we had the payrolls on Friday. So the US, the non-farm payrolls, unemployment numbers. We ran our webinar live over that with a real surprise number there. So we had, of course, I can't remember what it was off the top of my head. I think expectations were for 180,000 jobs to be added. We ended up having just 20,000 jobs added in the US economy last month. So we did see a bit of stock market weakness when the announcement came out, because it painted a somewhat negative picture for the US economy. We saw the old favorite golds moved higher. So I've just flipped this over to a chart for gold. So this was when the payrolls came out. So the price of gold was trading around 1290, 1292, and it did push up very briefly within 40 minutes of the payrolls coming out back above 1300. Okay, so we saw a bit of life come back into the gold price. So just going back to the longer term chart, for me, that recovery from August last year is still intact. We have had a sell-off. We have seen these old lows. I think they're the lows for the year, aren't they? The lows for the year on gold are about 1275, 1277. We did see gold last week trade as low as about 1280, and we've seen it hold. So I think it's another interesting one to watch this week. So for me, there's the sort of the sharp move on Friday on the payrolls, but for me, 1275 is the level to watch. So I still think personally we're going to see a move back to the highs from February, about 1345, and maybe higher up to last year's highs at 1360. The only question is, does it sell off a bit more? So I would say, let's say I was buying it today, the closest I would want my stop loss is below the lows for last week. So the other side of 1280. Arguably, a better place for a stop loss is the other side of the January lows, the other side of 1276. So I think it's going to be an interesting week for gold. We had it blip up on Friday. That trend from August is still intact, and it's all about whether these lows for the year hold. Okay, so for me, I still think it looks positive. Let's take a look at oil. Oil has been a bit dull in the last month. So it hasn't, it's not really changed that much. We're trading pretty much where we were on the 20th of Feb. So and you can see just how sideways it's been. This is the daily chart that we're looking at now. You can see just how sideways that oil price has been after the strong rise. And I still think 58 to 60 is proving to be a real barrier for oil, but it has rallied up from $43. It has had a big move, and it's just a bit dull now. So maybe I think what would be healthy is if we had a deeper sell-off, maybe back to 52. And can we flush out some fresh buyers who may have thought they've missed the rise in oil? When it's flipping around like this, it's just doing nothing. So I think we need the better move would be a move down to 52. If it broke 60 upwards, I think we'd have a lot of fear of missing out buyers coming in. But at the moment, it just can't seem to do that. So I think maybe in the short term, the risk is for a deeper sell-off in the oil price, but that still looks like a buying opportunity. What was interesting was the move we had on Friday, sold off for much of Friday, actually into the afternoon for Friday. We had something of a false break. Again, these breaks where we get big levels from before, and the big level was the late February lows around about $55 a barrel. It did push through that, again, I think driven by the payrolls, traded to 54.77, 54.80, but then bang, we've bounced back $2. So I think for me, the 55s still really good support, 54.70 to 55. But you can just see on the upside, it just cannot get through 58. It just keeps knocking its head up here. So it's a little bit dull, I think, the price of oil. Let's take a look at stock markets. I think it could be an interesting week for stock markets because last week, this is the Dow Jones. Let's flip it over to a daily. So last week we had markets in decline pretty much. We did see a bit of a recovery on Friday, but pretty much in decline for much of last week. So here's the daily chart on the Dow. And actually, it's not that big a move in the great scheme of things, but it is probably one of the bigger moves, the bigger sell-offs, sustained sell-offs that we've seen since the recovery started 2.5 months ago. Okay, so we did see this market go from highs of around 26,230 at the end of Feb and traded last week as low as 25,220. So we have seen the market drop about 1,000 points in a couple of weeks, and I think it did need it because it had just been going up what felt like almost in a straight line. You can see it's heading towards oversold on the RSI. We haven't been oversold this year on the RSI. So again, that could be interesting. The MACD is still a little bit bearish, but let's just take a look at the hourlies. And again, just a reminder, US markets open at 1:30 at the moment because their clocks have gone forward. So going into today, we saw that move lower on the payrolls. It traded down to 25,220. We did see quite the turnaround in the afternoon. This is an hourly chart. So ended up recovering a good 200 points and more off the payrolls low. So going into this afternoon, for me, that's the level to watch. Okay, so I think there's an interesting afternoon ahead for stock markets. So 25,200, near enough, is the low from Friday. So if we were looking to be a buyer, it's currently trading at 25,320. So if it drifts off, let's say it drifts off 50, 60 points from here, do we see strength coming back in ahead of Friday's low? So for me, if I was a buyer this afternoon, depending on what happens on the Dow, I would want my stop the other side of 25,200. But of course, looking on the hourlies, this is last week. This was from Sunday night last week. That trend is pretty much still down for the week. So, if we're going to trade with the trend, look at that. It's almost a perfect trend line. If we're going to trade with the trends, this is where the strength stopped on Friday night. That trend line around about 25,500, just above there. So arguably, the more disciplined trade is to wait for strength and sell into that strength. But we've got some definite levels to watch, I think, going into today. 25,560, let's say, on the upside, and 25,200 on the downside. I think those are our reference points. So I think if we saw the Dow hook above 25,560, which would put us through Thursday's late high as well, then I think we can start looking at the rest of the week for a recovery. So I think today will be an interesting day. Okay, if we go through 25.2, if we fall below here, we're back below the lows from Friday. That downtrend is still in place. And I think we've got to look at targeting, 25,000, the lows from the middle of February. So as long as we get some movement this afternoon, I think it could be an interesting afternoon, whether we see it break above Friday's high or break below Friday's low. Let's see. I mean, of course, it's sod's law now. It's just going to stay sideways and stay within that high and the low this afternoon. But I think we've got some definite levels to watch. So we'll come back to it tomorrow at 12:30 and see how it performed. If we take a look at the DAX, the German market, similar sort of stuff. I mean, last week it was in decline for much of last week. We did see on Friday a bit of a turnaround as the day went on, and we've started reasonably positive today, but we're still at a little look above Friday's high actually this morning in the first hour. but still a little bit trapped. So again, I'm going to think it's all about what happens with US markets. So I think that's the interesting one to watch for me this afternoon. US stock markets after a bit of a late recovery on Friday, after something of a quite a weak week overall last week. Excuse me, pardon me for sneezing. So I think that's it, really, isn't it? That's our quick look at the markets at the beginning of the week. So what we're expecting, lots of volatility for the pound because all the votes all start again. But if it's going to turn around anywhere, pound US dollar, then we're there now. So I think this 129.50 low, really important. So really, even if it sells off for here, looking to see if buyers come back in. Gold is an interesting one for the rest of the week because we had that blip above 1,300 on Friday off the payrolls. But for me, the immediate ones to watch, US stock markets, and it's all about Friday's high and low. We're still in that downtrend that was in place all last week. 25.2 is the low for Friday. If that gets broken, it does suggest the bears are still in control, and the risk is for the markets to sell off a little bit further. We'll wrap things up there. We will come back at 12:30 tomorrow and do it all again. Of course, don't forget, as well as all these live sessions, we do put quite a few recorded videos on our website. We're doing at the moment, which might be of interest to you if you're relatively new to trading, we're doing this course. I think 3 parts have gone up so far. Let me just bring it up on the website. So if you go to our YouTube channel, just by clicking on the Capital.com logo just below this video, we are just doing how to trade Forex, a complete course. So the first 3 bits have gone up. So hopefully you can see them. You can see them there. So what is Forex trading? Forex basics, what moves the Forex markets? And I'm about to start recording the bits on technical analysis. So you might find those useful if you're a relatively new trader. But of course, to open an account, to have access to all the markets we've been looking at today, just go to the website, Capital.com. Any questions, drop me an email, david.jones@capital.com. Like I say, we're doing this live event at Heathrow, hotel in Heathrow, 2 weeks on Saturday. When I've got the details for that, it's going to be free of charge to clients and non-clients. And once I've got the details for that, I'll put the link in later this week. But that's it for this week. Thanks for coming along. I think it's going to be an interesting week for various reasons, but I think it's another week of very much Brexit focused. But we'll be back at 12:30 tomorrow and do it all again.